October 1929. You're sipping champagne in a penthouse, dreaming of a stock market that only goes up. 24 hours later, the ticker machines are screaming, unable to keep up with the avalanche of sell orders. The wealth of a decade vanished in a weekend. The American dream turned into a nightmare overnight. We were told poverty was gone forever, but we were actually standing on the edge of a cliff. What happens when a world built on debt finally meets reality? Welcome to the Wealth Archive. Today, we witness the fall of the Roaring Twenties. To understand the fall, we must first experience the heights of the greatest party in history. After the Great War, America entered a decade of pure momentum. The Roaring Twenties had arrived. Technology was changing lives. Radios, cars, and appliances were no longer luxuries. They were the new standard. It was the age of jazz, youth, and unbridled optimism. The stock market was the national religion. Skyscrapers reached for the stars, and everyone believed the sky was the only limit. The new motto was simple: everyone ought to be rich. And the stock market was the magic ticket. For the first time, regular people, not just bankers, were betting their life savings on stocks. From 1924 to 1929, the Dow Jones soared. It seemed like wealth could be created out of thin air. But beneath the golden surface, a dangerous engine was driving this growth. It was a game of shadows, built on a foundation of borrowed money. It was called buying on margin. You only needed 10% cash to buy a stock. The bank lent you the rest. This was 10 times leverage. If the stock went up 10%, you doubled your money. It felt like a miracle. Even the shoeshine boys were giving stock tips. When the taxi driver and the waiter are telling you what to buy, beware. But leverage is a double-edged sword. It accelerates your climb, but it also amplifies your fall. Most investors didn't realize they were standing on a mountain of debt that they could never pay back. The market had become a fragile porcelain vase, balanced on a trembling table. Banks were pumping money into the market, driving prices higher and higher, disconnected from reality. By 1929, production was slowing down. Consumers had stopped buying. The real economy was cooling. The stage was set. The party was over. The needle was moving toward the bubble. September 1929. The stock market reaches its absolute peak. To the public, the fountain of wealth seems eternal. But high above, the clouds were gathering. The bulls were tired, and the bears were hungry. Economic data began to chill. Production was slowing, and inventories were piling up. The real economy was failing. The smart money began to exit quietly. They sold their shares to the enthusiastic public and vanished. In early October, the market started to wobble. Investors felt a strange chill in the air. but the music was still playing. A question began to whisper through the canyons of Manhattan. Is it finally over? October 23rd, the final night of the illusion. Tomorrow, the world would change forever. The margin calls were coming. The leverage was about to snap. October 24th, Black Thursday. The wave of selling hits like a tsunami. Panic spreads through the trading floor. Everyone wants out, but there are no buyers. The bid prices are disappearing into thin air. The bankers tried to save the day. They dumped millions into the market to stop the fall. It worked for a moment. Over the weekend, the realization set in. The 10% margin meant people owed money they didn't have. October 29th, Black Tuesday. The darkest day in financial history. The market isn't just falling, it's disintegrating. The ticker tape is 2 hours late. People are selling blindly, realizing they were broke hours ago. Life savings, college funds, retirement dreams, all gone in a single afternoon. By the closing bell, $30 billion had vanished, more than the cost of the entire Great War. The party didn't just end, it crashed into a wall. The Great Depression was knocking at the door. The stock market was only the beginning. Next, the banks started to fail. People's savings were simply gone. The color drained out of America. The Roaring Twenties became the silent 30s. Unemployment soared to 25%. 1 in 4 Americans had no way to feed their families. Luxury cars were sold for peanuts. The elite realized that wealth built on credit was nothing but a mirage. This wasn't just America's problem. The crash triggered a global collapse, paralyzing trade from Europe to Asia. Even the land turned against them. The Dust Bowl added misery to the economic ruins. The music had truly stopped. The party of the century had left a hangover that would last a decade. Nearly a century later, the tools are digital, but the patterns are identical. We live in a world of debt once again. Leverage is easier to access than ever before. When everyone is an expert and every cab driver is a stock picker, remember the lesson of 1929. The greatest crash taught us one thing. The market can stay irrational longer than you can stay solvent. Are you trading with your own money, or are you dancing on a thin thread of debt?